All right, good morning, trade pros. Welcome to our morning market update for Friday, July the 26th. Hope you've had a great day. Wow, the camera's far away this morning. Uh, and today we're going to talk about a few things, actually quite a few things, including today's GDP figure that just came out, some earnings reports, and we're doing something new. So I usually give you a morning market fun fact on these morning market updates, and they're pretty useless, to be perfectly honest with you. It's kind of cool, but you can't use them at the bar. So instead, what I'm going to do is switch it up a little bit and call it morning motivation. How about that? Everyone could use a little bit of motivation in their life, including myself and you. All right, so morning motivation. This is going to be a 1 minute piece every morning, 1 minute ish. All right, a lot of people I've noticed, I do a lot of personal development. I go through moods of listening to music while I work and then listening to a lot of personal development stuff. Spend a lot of money on it, and I think it's helped me a ton. But I've noticed that a lot of people look to the past with regrets. All right, they put their energy in the past, saying, "If I would have changed this, this would have happened today." And then some look with to the future with optimism, saying, "If I do this in the future, it's going to be so great." All right. Well, here's what I'm here to tell you: both of those are useless. All right, both of those are daydreaming. Whether you're thinking of regrets in the past or what's going to happen in the future, none of that is relevant. All right, and when we do that, we shift away from the timeline to the past or the future, but we miss the now. And the now is the only thing that's important. All right, you can't make change in the past or the future. You can only make change in the now. And I think a lot of us are giving up our now. Traders especially, right? They're always looking towards the future. What else could they do? But live in the moment, live in the now. The most important information is here, right now. Not a minute ago. That's useless. Not a minute from now, but now. All right. And from a different perspective, from a scientific perspective, what is energy? Energy is motion, right? So you have to be moving. So in the now, the most important thing is to take action. All right, take the steps towards what you want to become. All right, but don't think about that too much. Just think about what you're doing now to improve yourself and keep taking action because energy is in motion. All right, if you're staying still, there's no energy potential for you. So make progress every day. All right, that's your morning motivation for today. At 8:30, Q2 advanced GDP came out at 2.1% versus 1.8 expected. That's a beat. That's a stronger number. It's a good outlook. It's a good positive thing for the economy. All right, but the big question is this: what will the Federal Reserve now do? The Fed is slated to cut one time or 25 basis points next Wednesday, July 31st. All right, and that's what they've kind of set the expectation for. Markets are expecting two rate cuts at 23%. All right, 23% chance of having two cuts. I don't think that's going to happen. I think one's enough, and especially now with a stronger GDP. All right, the Fed is going to, of course, call this transitory and say this strength is transitory, but a recession's coming and we got to be prepared. Let's do an insurance cut. That's all they're going to talk about this. But the point is this: stock markets are higher. The economy is showing signs of improvement, especially with this latest GDP number. All right, and the Federal Reserve, now it's on them to explain what they see to justify rate cuts. So I think the rate cut optimism is a little bit pared back this morning, especially when you go out in the future, because we're going to get one rate cut in July next week. It's already a done deal. All right, it's just going forward after that, what's expected to happen. All right, and what's that based on? On the now, the GDP report. Yesterday, the House passed a 2-year spending agreement that would lift the government's borrowing limit. The legislation is expected to pass through the Senate next week. It's not official yet. It's an agreement. It's not signed off, agreed upon legislation. It lifts the spending $320 billion above the limit set in 2011 budget law. So basically, what is happening is the government's maxed out their credit card and calling their company to request an increase. That's what's happening. Let's call it like it is. All right, and suspends the debt limit to the end of July 2021. All right, it was backed by 219 of 235 Democrats who voted, and only 65 of 197 Republicans. And when you wonder what's holding the Republicans back from voting on this on a larger scale, it's the word D that ends with a T, debt. All right, it's a lot of debt you're going to add on to the book. It's more treasuries you're going to have to sell. All right, and that's one of the main reasons, right, the government benefits from rate cuts. Very few people will tell you this. The government is a net borrower. All right, they're net debt holder. Debt means that you have to pay out coupon payments from your bonds to service that debt. Higher interest rates actually hurt that. All right, it means your payments become more money on the same amount of debt. Therefore, lower rates are good for the government, especially one that's running a massive deficit, right? And a huge budget deficit. It was $1 trillion for last year. So anyways, that's how this is important to the market. The more important thing, though, that affects the markets is this. It's that in September, there probably won't be another government shutdown, right? There was some worries there starting to accumulate because we've seen a government shutdown in Donald Trump's term. It looks like this House bill at the moment, if it passes, is going to bypass that, and we won't have to worry about it till 21st of July. All right, Google yesterday reported massive earnings. They smashed expectations on all fronts. $14.21 earnings per share versus $11.50 expected. All right, 31.7 billion quarterly second quarter revenue versus 30.9 billion expected. Paid clicks on Google properties went up 28% year over year. So they're getting a lot more volume, but the cost per click has gone down 11% year over year, which makes them a little bit less revenue. However, because of the volume, they make up for it, and new advertisers will benefit from this because they pay less to advertise on Facebook. And that's all Facebook is a giant ad agency. Since 2011 or so, any new tech company hasn't been a tech company. It's been an ad agency for the most part. All right, look at any company, Amazon excluded, Facebook, all right, Google, all these big social networks, they're just ad agencies. There's no social networking, selling ads. I don't see ads because I have an ad blocker. You should too. I didn't say that. All right, on to, oh yeah, I want to say something else about Google. It aims to triple its cloud sales force in the next few years. They're really pushing their cloud products on Google. That's what management referred to on their earnings call. And cloud growth drove the second quarter as the number one addition to income. Second place in revenue was YouTube. All right, YouTube was the second largest growth contributor in the first and second quarter. I've said this a lot of times because we're on YouTube. A lot of friends and colleagues, right? I mean, they're not friends for long if they have this kind of outlook. I only hang out with positive people, unfortunately. For the other ones, they say YouTube's dead, man. Like YouTube's done as a platform. I'm like, YouTube is just beginning, right? People are losing screen time on their TVs and spending more time on on-demand videos. The proof is in the pudding. I mean, I don't know what those people were thinking, but they weren't living in 2019. I'll tell you that much. All right, so YouTube, that's great results. Thank you, YouTube, for allowing us to be here and gathering our community in one awesome place. Amazon did not do so well. The reported second quarter earnings of $5.22 per share, all right, versus $5.29 expected. Revenue was 63.4 versus 62.6 billion, and they dropped their guidance to $2.1 billion for the next quarter versus an estimate of 3.1 to 3.7. So what Amazon is basically doing is this. They're investing in themselves to do same-day delivery. And the same-day delivery is costing them money. All right. However, they've set the expectation, and it's a whole to deliver a product in 2 to 3 days is a whole different thing than delivering it the same day and guaranteeing it. All right, from infrastructure standpoint, but also from client expectations. Because now instead of going to the store to get something that they need today, they could order it on Amazon. So they have to deliver on that. That comes at a high cost, and Amazon has openly said our next 2 quarters will be hurt on a net income basis and also on earnings per share. But it's an investment in ourselves for the future to be able to deliver the service. The real question is this: the shippers who are moving all this volume for them, how did they feel? And are they going to start to experience some more pressure to ship packages for lower? Their margins already squeezed next to nothing because of the volume Amazon sends out. So that's where the debate's going. All right, Amazon missed. There's no other way to say it. It missed. AWS, lower than expected. All right, Amazon Web Services. When Amazon, it's a massive product. People don't realize when Amazon Web Services went down about a year ago, 60% of the internet just blacked out in 1 second. All right, so that's Amazon. Disappointment overall, but still some positive areas in there. It's a growth stock. In today's markets, Japan's down 0.4%, Hong Kong's down 0.7, China's up 0.24, India up 0.29. In Europe at midday, markets across the board up about a half percentage point. Futures in the U.S., Dow's up 0.3, S&P's up 0.3, Nasdaq's up 0.4%. All right, tech stocks catching a little bit of a bid. Google's up huge pre-market, and as they should be. They smashed their earnings report. It's really good. Google as a whole is a giant, right? So the giant making more money. People often say, oh, it's so easy for Google to make money. They already have all this money. In fact, the more money that you make, the harder it becomes for you to make even more because you have to build scale. All right. And it becomes exponential. So this is not just a good number. It's very impressive on Google's behalf. All right. So good job, Google. Keep going. Crude oil is up 0.6%. Gold's up 0.3%. And Bitcoin's down 3.4% to 9,770. Below 10,000 and holding its ground there, consolidating. On today's economic calendar, we already had the big event, Q2 GDP for the United States, which came out positive at 8:30. 1 p.m., we have Baker Hughes rig count, which will impact the price of oil around 1 p.m. But the main driver for crude oil has been, and today still is, the tensions between Iran and U.S. So any headlines out of that today will move the market. It's a Friday. Yesterday, we set an all-time high, and we sold off grotesquely at the same time. All right. Today, the question is, will we rally? My call is this: sell the early morning strength, all right, and buy the early afternoon weakness, because on Friday, all right, when we've hit an all-time high, what tends to happen is a ramp into the close. Big bids coming in to close their books at high value, and that could take us to nachos, new highs on the close. All right, it's nachos. So you get some cheese and get prepared for the afternoon. In the morning, I'm going to start by fading the strength. And if it's too strong, turn around and buy it. I don't fight, I win. All right, guys, take care. Have a great day. Appreciate you all. Have an awesome weekend with you and your beautiful families. Sending you love, joy, and happiness. Georgia Trade Pro. Have a great day. Ciao. Trade Pros in the room. Let's get into this. You have some news flow this morning. Hasn't really impacted the S&P 500 that much. I'll tell you why in a second. And then we're going to set up some trading zones and high opportunity levels on key assets such as S&P, NASDAQ, Dow, oil, and gold. Let's get into it. I'll kick it off with the S&P 500.